Welcome everybody to the SNN Network virtual conference. I'm your host, Robert Kraft, and this is a very special panel of mine because this happens to be my Planet MicroCap podcast panel. It's a virtual edition panel again, and as you can tell here, we have an incredible lineup to join me here for this podcast. I'm going to go top left all the way around. In my top left, we have Maya Peterson. She is the author of Lighthouse, Women Leading the Way in Finance. And direct diagonal from me is Lauren Templeton. She is the founder and principal of Templeton and Phillips Capital Management. And then just below me right here is Perth Tolle. She is the founder of Life and Liberty Indexes. Everyone, thank you for joining me on the podcast today. How's everyone doing?
Great.
Good. Thanks for having us.
Absolutely. And I just want to preface right now, Perth is in the middle of a hurricane. Everything's okay, but we're going to be dealing with some zoominess for this. So I ask everyone bear with us there, but we're very thankful that she's joining us, and we'll get through the tech, all the tech stuff. So
thank you.
Yeah. So I'd like to dig right in and really ask everyone's background and what led to your passion for finance and investing. So I think we're going to start first with Lauren because she has not been on an individual episode of the podcast yet. So we're going to start with Lauren, and then I'll throw it to each person from there. So Lauren, the floor is yours.
Yeah, sure. My name is Lauren Templeton. I run a firm called Templeton and Phillips Capital Management. I obviously grew up in the investment industry. My great uncle was Sir John Templeton. His career was really hitting its stride in the 80s when I was a child. My father was very passionate about investing. I think a lot of people out there have heard me tell the story that my dad wanted me to start picking stocks when I was about 7 years old. He allowed me to pick one stock per month. He would buy a share of any company that I wanted, and he would take the stock certificates and mat them and frame them and hang them on the walls of my room. So when I was growing up, my room was literally wallpapered in stock certificates. He was such a passionate investor that he took every opportunity to teach me about opportunity cost. He would put me to bed with stories about the magic of compounding. So I have grown up with parents and a family that everybody was very passionate about investing, and I knew that this is something I would pursue as a career. I like looking at Perth's cat in the background.
I'm trying to get her off here. Sorry.
She's precious. Flavor.
Thanks.
Lauren, real quick follow-up there, because actually my family has been we're collectors of stock certificates because they're so cool looking at, especially some of the older ones like the Disney one and all that. Full disclosure, not a shareholder, but I don't know if you've ever been asked this question. I have to ask, what was your favorite stock certificate? Just the certificate, not stock, the certificate that you had on your wall.
That's a good question. I don't know that I had a favorite certificate. My favorite share to own was Shoney's, because at the time it was trading for cents on the dollar. But if you owned one share, they would give you an annual gift certificate for a free meal at Shoney's. So the dividend yield on that puppy was huge. But, the stock certificates were interesting, and I like it because it really it gives you a sense of ownership in a company. So instead of it feeling like gambling or the stock market was a casino where I was just guessing, I felt like these are businesses. This represents my share of ownership in these businesses, and it gives you a different perspective. But it was fun. I need to get up in the attic and go through the old stock certificates. I still own a lot of those companies, and I don't know how many shares of Walmart it's worth now, but lots, because the stock is split so many times. And I still have the original certificates because they were matted and framed. A few of them are bankrupt, and those are the ones that I'm most interested in getting out and hanging on the wall of my office, because you learn more from your mistakes than you do your successes. It's always good to have some reminders around that no matter how careful you are, you can always miss something.
That I can't wait to hear more about those stories, and I'll bring that up with you later. But I also want to now throw to Maya to get her background and what led to her passion for finance and investing. And our intention with this answer right now is to make you feel really bad that you haven't written 2 books by the time you're 17. So Maya, please make everybody feel bad now.
I really got started investing because of Lauren. I heard all of the stories about her as a child, and I thought, like, oh, if she can do this, I can do this. And I was so inspired. And the one that I specifically remember was the one about when she went to Walmart and saw that the bathrooms were dirty. So she wrote the letter to Sam Walton, the CEO at that time, and said, like, you need to fix those bathrooms. I'm a shareholder. This isn't the company I want to see. And that she felt so much power at a young age. And I felt like I could have that ability too at such a young age. I didn't pay rent. I didn't have a car. I probably wasn't even allowed to bike around the block by myself, but to be able to own shares in a company felt super powerful to me. So I just started reading and having a passion for business, and I started a little camp called Camp Kids that was just meant to maximize profits by having multiple kids there. So I just learned how a business worked, and after learning about Lauren, I wanted to get into investing. And from there, I just thought that I wanted to share more and to spread more joy with investing and kind of break down those barriers that young people can feel. And so I wrote my first book, Early Bird, and then I was so inspired by Lauren, by Perth, by so many other people. And I know that this is a question later, which led me to my next book, Lighthouse. Yes.
Shameless plug. Yep. We're doing shameless
book
plugs.
1.
Book 2.
Yeah.
hers is Perth's the right mirror. I hope it's Lighthouse, but okay. I think everyone gets that. But thank you for that, Maya. So now Perth, our global markets expert running Life and Liberty indexes. Can you give us a little bit about your background and what led to your passion for finance and investing?
Yeah, and as Maya knows from interviewing me for her second book, which I'm so honored about, I was originally not interested in finance. I did go into college majoring in finance, but only because that's something that my family did. But I was more interested in art and graphic design. I actually went to art school before graduating with the finance degree, and in art school figured out that, hey, this is not something that I'm that great at compared to everyone else. So maybe this is not my career. And then after college, went and lived in Hong Kong, where everybody was in finance. I saw that with the power to direct investments, you have a lot of power to direct the destiny of markets. And I started having a passion for it at that time. So it was my time in Hong Kong, where I saw the difference that freedom made in markets, the difference that freedom made in my life, in the markets of US versus Hong Kong versus China, that I got more of a passion for investing.
Absolutely. And actually, I'm going to throw it right back to you, Perth, because this kind of goes into our next question. And that's your investing philosophy that you most identify with. And you kind of created one for yourself with the Life and Liberty indexes, and really borrowing a few different strategies and then putting it all together. So can you describe the index a little bit and then a little bit about your strategy as well?
Sure. So our index is a freedom-weighted emerging markets equity strategy. And what we do is we give freer countries a higher weight, less free countries a lower weight. And the worst offenders as far as human rights and economic freedoms are excluded from our index just naturally because of the freedom weighting. This is different from most indexes, which are market capitalization weighted and in emerging markets. And I do believe in indexing very much. It's just that in emerging markets, the way that we've traditionally done it has led to this giant weight in China, which, it's most emerging markets indexes have 40% of their weight in China now. And that's just not diversified. It's a huge concentration risk, especially in a market like that. also has allocations to Saudi Arabia, Russia, and some just other very unfree markets. So that's why we created the freedom weighted strategy, the Freedom 100 Emerging Markets Index, to kind of give investors an option to invest in the emerging markets without these very autocratic regimes, so that we're not funding some of these atrocities that are going on.
Absolutely. Absolutely. I invite everybody to go check it out. She breaks down the full strategy of then what companies within each nation that they then do invest in, right? Like it's some of the larger cap names in that country, and then going from there, right?
Right. We basically are trying to capture a good representation of the market through the largest holdings, in each market, the largest, most liquid, and exclude state-owned enterprises, just to bring the economic freedom theme all the way through.
Got it. And then Lauren, same question. Please tell us about your Life and Liberty indexes that you've started. I'm just kidding. What investing philosophy do you most identify with, and then your investing strategy from there?
Yeah, we're global investing with sort of a global value investing. I grew up in that exercising that discipline. So we start with quantitative screens and narrow it down to the bottom decile of the market. And there we're really hunting for quality firms that their share price may be depressed for a variety of reasons. It could be that they're in a certain country or that they're in a certain industry, but we're looking for anomalies. So companies that have fallen into the bottom decile, they're largely quality firms, but they have depressed stock prices for a variety of reasons. And so we do quantitative screening, then we do qualitative analysis on top of that. We're often using a discounted cash flow model to model out the company's fair value over various scenarios. And we like to buy when we have 50% upside to our approximation of intrinsic value, which is a bit of a wider margin than a lot of value managers look for. But like a typical woman in finance, we tend to have a little bit less self-confidence than the men. So I like to have that wider margin, and I think it works in our favor a lot of the times. So, typical value managers with a preference for quality. We like strong balance sheets. So it's really important in this environment as well.
So quick follow-up, would you say that your strategy and your philosophy has changed much since you were 7 years old?
Yeah, for sure. As a 7-year-old, you're picking whatever is popular. So, some of my stock picks as a 7-year-old were the Gap, Disney, Shoney's. I like to eat there. So, and that's the same way I'm dealing with my children. So they're allowed to pick stocks, and they're often picking very familiar names. I don't attempt to have a discussion with them about valuation. We do talk about, okay, well, you like Disney. What do you like about Disney? Do you think the company will make a lot of money from that movie? How do you think it will affect the business? What percentage of the revenue of the company's total revenue is that? So conversations like that, I keep it small so it's not so intimidating. I think it's really important, firstly, to expose your children to just the vocabulary that comes along with investing without putting too much pressure on them. I mean, you can't really, 7-year-olds, maybe not Maya, but other 7-year-olds have a hard time with discounted cash flow models. And, if you start talking about quantitative metrics, it's not a good approach. But
I still have issues with discounted cash flow models. So I can only imagine, that your children get a pass. I shouldn't get a pass, but
listen, Maya might be able to do it. I had her present to a room full of like 300 expert value investors in Omaha one year when she was a young girl. And she stood up in front of everybody and presented J&J. So I wanted her to have that experience and what it was like to stand up in front of an audience and present. She did a great job. And her thesis, as I remember, had something to do with toe tape because you were really into ballet at the time. Yeah. So it's, you've got to work with kids in a totally different way.
It's just, there's so much value in every single perspective, no matter how young, old, gender, everything, you know, like that you want to get those variety of perspectives because things might get uncovered that you never thought to look at. And that's what might ultimately be the main growth driver. You never know. You never really know.
True. Everybody can have a good idea. So,
except me, but that's why I host a podcast, because I had terrible ideas. I just want to learn from the best, but I digress again. Maya, same question, you know, what's your investing philosophy and then of course your strategy?
So I'm a high school student. I'm not a professional like Lauren or Perth. So I just enjoy researching, and as defensive and value, I have a really long future ahead of me, hopefully. And so I am just investing for the long term and in companies that I know well. Like Lauren was explaining with the brands that are kind of popular and, you know, I started out investing in companies that I would know better, like Disney's, Mattel, Hasbro, to Intel and Hasbro, of which I'm still shareholders of today. But so now I'm kind of just researching and figuring out what companies I want to look at now. But like I said, I'm not a professional. I'm just really enjoying learning. And I enjoy attending annual meetings, and I feel like I like absorbing all of the information. Yeah.
Well, I mean, look, how you find time to actually do investing between writing 2 books and going to school. I think everyone's going to give you a pass if you don't have a new idea every week or anything like that. But, you know, as we said, perfect segue, because my next question has to do with Lighthouse. And it's a Maya inspired question. And we're going to go right back to you, Maya, because you inspired this question. So I have to ask, who is your Lighthouse, and how have they inspired you to be the investor you are today?
I've had so many that I've had to write a book about it. So of course, Lauren and Perth are both lighthouses to me. Lauren has helped me so much. I was going to use the example of going to speak to the Value Investor Conference, because that was the first time I was called the most powerful woman or person in the room, because I was the youngest and had the most time. And it just made me feel so empowered and like I could do anything. And then of course, Perth has just so much tenacity to start her fund from scratch, and to go from art school to this, and just taking a chance and having the confidence in herself, and to do that was super inspiring to learn. Of course, there's lots of other women in that book, and my parents have been lighthouses, and I just think a lot of people who have had the confidence in me and who have helped me. And with my books, I've had a lot of professionals like Todd Wenning, who's gone through and edited and helped me come up with ideas and supported me. And I really think that I wrote those books more as a learning mechanism for myself than a teaching mechanism for other people. And that I was able to learn a lot with all of the people like Lauren, like Todd, like Perth, who have helped me along the way. And I'm very grateful for that.
And I mean, I probably should have prefaced this. I should ask this first before we did that. Can you explain to everybody exactly what you mean by lighthouses?
Oh, lighthouses are guiding figures in your life. They're like a lighthouse. They shine a light so you can see the path in front of you. And for some people, that's people who have walked the path before and that you can find inspiration from. When I was younger, I had a board of female CFOs in my room, and I highlighted where they went to college, where they went to high school, what they majored in, what their first jobs were, so then I knew exactly what my path would be so I could be a CFO. And so for me at that time, those were my lighthouses. But for some people, if you're going through a hard time, lacking confidence, and you find somebody who embodies that, that can be your lighthouse. So it's really individualized for whatever people need at that time in their life. And there's more than one, because when you're a boat going along the coast, you go from lighthouse to lighthouse to get to your destination, right?
That's amazing. All right, quick follow-up. What did the board look like of CFOs? I mean, did you have the picture? And then, like, I mean,
yeah,
I'm trying to visualize what that looked like.
It was a little
very cool
whiteboard that I taped photos of all of the female CFOs of the Fortune 500 companies, and then I had their bios, and then I color-coded, highlighted everything, so then I knew, and then I would make a spreadsheet so then I could figure out. Most people majored in accounting, most people, whatever it was, yeah.
Brilliant. I'm stealing that from my daughter. So Lauren, same question. Who is your lighthouse and inspired you to be an investor? You already kind of alluded to it a little bit, being part of the Templeton family tradition, but I'd love to hear more about that.
Obviously my great uncle, Sir John, influenced me in so many ways and continues to do so. Like, I am rereading one of his books right now called The Worldwide Laws of Life. I've read it before. I try to go back and read it every few years. It just has some good guiding principles about how to live a quality life. And he spent a lot of time thinking about these issues as well as writing about them. I have books of his old letters here. I'll show you where I spend my time. Like, these are all of his letters from the 1940s through the 1960s. I'll read them, I'll reread them a lot because they're full of wisdom. And they're really applicable to today's markets and to different life events today. And then my father is a huge lighthouse for me. I really admire him in so many ways. I never really thought that there was anything special about the way he raised me. I think, I'm his only daughter. So he didn't have a son, and I did everything with him. I've raced cars with him. I've gone rock climbing with him. I was just along for the ride. And now as an older person, I do reflect back on that and think, well, that was a little different. Not every little girl gets to do those things with their father. And he just inspires me in many ways. He's always said, go for it. Don't worry about making mistakes. You'll learn a lot when you do make a mistake. Pick yourself up, dust yourself off, get back on the horse. And he's inspired me just in so many ways. He is a professional investor in that he does it for a living, but he doesn't, work for a big company. He's self-taught, and he's been extremely successful. He reads almost every book he can find on investing. He's meticulous in his note-taking, and he shares these lessons with me still today. So Uncle John and my dad have been the two big lighthouses in my life. But like Maya said, there's so many others. I mean, Maya, you're a lighthouse to me. So it's a true inspiration. Maya says I've made this huge impact on her, but I really haven't. I've done very little for her. It's really all been Maya. She's done it all. And you just really inspire me. I use you as an example with my children, and they get a little tired of that. And they're jealous of you sometimes.
Oh.
But, in Perth, I'm so excited to learn about what you're doing. Freedom and human flourishing. This is such an important thing. And people don't realize how important freedom is, and economic freedom to investing and investing returns, and how it all goes together. So the Templeton Foundation is super involved in freedom. And, Uncle John obviously had his career in investing, and people often say, how did those two things go together? And that's quite simply,
Yeah.
they are very directly related. So I think what you're doing is just it's a true inspiration to everybody, and I can't wait to
Thank you.
learn even more.
Thank you. That means a lot coming from you, because Sir John is, I think, most people's heroes in emerging markets investing. So thank you for that.
Yep.
Well, I think that's actually a perfect segue, Perth, to your lighthouse, and who inspired you to not only be an investor, but also inspired, launching Life and Liberty indexes.
Yeah. So, like I just mentioned, we all have our investing heroes like Sir John Templeton, and for me, Rob Arnott was one of them, because he was the first to do non-cap weighted indexing and make it a mainstream thing, and he's actually one of our partners and investors as well. So we're so proud about that. But the people that continue to inspire me every day are the freedom fighters around the world, the human rights activists, especially some like in Hong Kong, for example, the kids that are risking their lives and futures every day for freedom and better future, for the future of their country and their homeland. These are the people that inspire me to keep doing what I'm doing, because a lot of times we feel like as freedom investors, we're not in environments every day where we are as appreciated as we are here today. So it's a new concept for Wall Street, and I think a lot of us in the finance industry have been focused on short-term returns. We're not really worried about things like, human rights, for example. So it is a new strategy, and just seeing that these people are around the world fighting for this every day, regardless of outcome, just because it's the right thing to do. That really inspires me. I think Lauren and I have spoken before about the Human Rights Foundation. I have done some things with the Human Rights Foundation, gone to some of their conferences, or when they came down here for South by Southwest, I would meet up with these amazing speakers who are human rights fighters around the world, from Saudi Arabia, North Korea, China, Hong Kong now, and so forth, and just hanging out with them and just knowing their stories. It's amazing. So those are the people that have become a lighthouse for me.
Very cool. Perth, just to quickly follow up, because at this event, we were hosting a panel on why ESG and impact investing is taking center stage. And if my memory serves me correctly, we're airing this on Tuesday afternoon, and that panel will be tomorrow on Wednesday. And how does this idea of ESG and impact investing now taking center stage, have you been, this is going to be maybe probably a silly way to ask this, but have you been getting more requests to understand life and liberty indexes a little bit more because people are now paying attention more to ESG and impact investing?
Yeah, I think ESG, the rise of ESG has helped us to gather interest. I do think, though, that ESG has a long way to go, in that the way we currently do it, we're only looking at securities level metrics. So, the E, the S, and the G, environmental, social, and governance, on the security level only. And to me, that doesn't make sense, especially in emerging markets. You can do that in developed markets, and it makes a little more sense, but emerging markets are different. For example, in developed markets, if you're looking at something like diversity, you're looking at, women on boards or maternity leave policies and things like that. In emerging markets, we're looking at, okay, who doesn't get killed for being a girl, for driving, for going to school? So it's a very different situation. And also with ESG metrics, you have to have transparency and reliability of data. And you just don't have that in a lot of these emerging markets. So yeah, I think ESG has a long way to go, has some evolution ahead maybe, and we should look at possibly incorporating some of these country level metrics like we do here into ESG strategies. Because right now ESG, if you look at ESG emerging markets funds, they all have 40% in China as well. So so it's a bit of a ESG failure there, in my opinion.
Absolutely. Absolutely. Lauren, do you have any comment on some of what Perth is saying? Because like you said, the foundation looks at global investing in emerging markets as well. Do you care to comment?
I agree with Perth. I think ESG has a long way to go. I think we've seen a tremendous growth in ESG investment strategies and people really focusing on ESG because the current administration has really reduced regulation. And so shareholders have really said, okay, we're going to have to look to the companies to implement these changes themselves. So I think that has a lot to do with the growth we've seen in ESG investment strategies and the focus that investors are putting on ESG. I'm the beneficiary of the G part because I serve on 3 boards of publicly traded companies. So, I'm a woman, and I'm happy to be a beneficiary of that and serve on these boards. And I do think that I add value there. So I think these are all important parts of the investment spectrum we need to look at. But it's not one size fits all, as Perth says. 40% in China, well, that's, it's questionable. The Templeton Foundation is really focused. They're focused on religious freedom and, of course, human rights. They're involved with the Human Rights Foundation, but they're really focused on free markets. So, free markets produce creative thinking, innovation, and really support higher growth rates. Bureaucracies and regulation. So these are the things that produce lower growth rates. So as an investor, that's a really good way of thinking of free markets and how they might benefit you.
Absolutely. And And Maya, I want to come to you on this topic as well. Just, real quick, just to get from, I don't know if you're millennial. I think it's a Zoomer. I think, right?
I'm a month off from being a millennial.
Okay, so you're
But I'm Gen Z.
Okay, so the Gen Z generation.
Wow.
I mean, like, I mean, from your perspective, when you think about some of these things, as a private investor, I mean, have these things started to go through your mind as well, more and more as you're looking at potential ideas to invest in?
So I think just as a younger person too, kind of like what I talked about earlier, I feel this immense power that I haven't really felt in, paying rent, and that I have this ability to make an impact investing ESG, just with my small amounts of money, but still as a young person considering that small amount you can choose to support a company that's helping the world, or versus supporting a company that might be hurting it or hurting the members of the world. And so I've definitely been thinking about it a lot, and I think right now we just see a whole time for reform and change in a lot of ways, and I think we as young people are the people who need to be working on that change, especially because that's the world that we're going to be living in. So as people get into investing, it's important to invest in what you know, but also invest into a world that you would like to see, and in companies that you would like to see stick around, that make positive change.
Perfect. Okay, I'm coming right back to you for our next question. Get ready. So my next topic, and this is really important to me because if for those who are watching this and also listening in, this is not only the first panel I've done where all women investors that are joining me for the podcast are women. Sadly for myself, I'm sad to admit that I've only had 3, now 4 women on my podcast. And, I don't know if that's necessarily indicative of the small micro nano cap space and there not being as many women that are focused in that asset class. But, part of the reason I wanted to put this panel together was to, acknowledge not only that was some of my shortcomings and wanting to do better, and part of this leads to I promise there's a question here. And the reason I say this is because I want to know how not only but how within our financial community, nuclear families, really as individuals, how can we encourage more women to invest? I'm not just talking about stock market, but really just in general, because as we said earlier in this panel, the more diversity of thought and the more perspectives that we can have out there when it comes to investing can lead to so many different things, new ideas and new ways in which we can potentially all benefit from. So, Maya, I'd like to come back with you there. What do you think we can do? How can we do better?
I think in just finance community and investing community in general, it can sometimes feel like a boys' club, to the point of just seeing, the depictions of Wall Street of just being men in their suits, to the little things of just using sports analogies to get things across. And personally, I've learned more in ballet than I probably would have ever learned in football. But that can be different for some people. But really just to appeal, like you said, to all of those different perspectives. Similar to Lauren, I really benefited from having simple conversations from a young age that introduced me to this vocabulary. So the things that would have intimidated me, like not knowing what certain words meant, didn't, just because from a young age we would have dinner conversations, because both of my parents are entrepreneurs, and their parents were as well, and their parents also. So I've benefited from a long line of business people. And so I think from the family sense, that having making it a common thing of like walking down the street, and if you're interested in getting them into investing, pointing out companies that they could invest in, or just talking about it at the dinner table, or having portfolio competitions, making it an approachable idea. And then for women, I think it's important to realize that you deserve your spot, that you have just as much ability as any other person, and to have the confidence in yourself and know that you deserve a spot on this team, on this board, on whatever it is. Because I know as a younger woman, sometimes it can feel like intimidating to be younger and a woman, surrounded by some older men, and feel that I might not have as much experience, and especially for women who might want to get into it later in their career too, that's always an option.
Absolutely. Thank you for that, Maya. And Lauren, same question. How can we do better?
You know, it's a good question. I'm actually not really sure. I used to run a program at the University of Tennessee at Chattanooga focused on value investing, and that program was supported by a female hedge fund manager that has her name is Renee Halgarud, but she had come out of Cargill and she wanted to create a program just for women. Of course, you can't do that at a state university, to have a program just for women in investing. But it was a program that I ran that was focused on women in investing, but men could enroll to take the class if they wanted. And we had more students than female students. It was really hard to get female students to sign up for these classes. In the business school, you had more women sign up for marketing classes than you did for the finance classes. So it's a challenge, but what I tell everybody is, and it's the same advice my dad gives me, you cannot opt out of the money game in life. You cannot. You are always going to deal with money. You will always, deal with it. You're going to have to make decisions. You're going to have to learn to be responsible with money. You're going to have to learn to invest it, or at least be knowledgeable enough to hire somebody to invest it for you. And you need to understand it, whether you pursue it as a career or not. So there's no way to opt out of the money game. And if you don't learn about it, then you're really setting yourself up to be to really rely on other people who may or may not have your best interest at heart. So I think everybody should learn about money, finance, and how to manage it. And if they want to pursue it as a career, great. And if they don't, they can just manage their own portfolios, or at least hire people knowledgeably to do it for them.
Sorry, I had to write that down. That's just that's going on my wall. You cannot opt out of the money game in life. That is just says it all right there. And Perth, same question to you. How can we do better?
Yeah, so I'm looking at Lauren and just I'm so Maya and Lauren, and I'm so energized by her just the way that her confidence. So I don't know if that comes from age or just being that young, but I remember that time, and I think we should continue to encourage young people. I did a guest lecture at Baylor University last year, and it was like the highlight of my year. And I launched the fund last year, so one of the highlights of my year, I guess. So just being around young people, I think being around positivity, whether it's young people or just other people that encourage you in the way that they see the world. There's so much negativity. Like, if women can look at ourselves as, oh, we're such so disadvantaged in the industry because there's nobody, we're the only ones, or sometimes we come from a perspective of lack instead of perspective of abundance. So for example, we think, well, there's only room for one woman at the table, so I have to be fighting for that space, when that's not true. There's room for 50% of that table to be women, and until it's 50% women, there's room for more. So we're and there's a lot of women's organizations and things like that that sometimes do the opposite. Like, now you're excluding men. So that's not what we want. We don't want to use men as our benchmark, as our baseline. We want, we're different, and that's what makes us powerful. The differences between men and women are what makes each of us powerful. So we have to embrace those and celebrate them, be around people who are positive about it. And I think looking at the next generation, I think we're in good hands.
That's for sure. I just based on this panel alone, I think I think we should all feel very good about the next generation, and also what can be done with the current generations as well, because there's definitely a lot that can be done. All right, so this is my favorite question to ask on every single podcast. And Perth, I'm coming right back to you on this one. What investing experience would you say has impacted you the most thus far in your career?
It's always the drawdowns, right? or the mistakes. So one of the mistakes that I made early on in this venture is, I sometimes with indexing, we don't look as deep into each of the companies we're investing in as we possibly should, or consider things that from every angle. And when you have detractors or haters, on the internet or wherever, sometimes they provide really good advice, even despite the messenger. So it's good to sometimes even listen to that. But now, not everyone. There are some crazy people out there, and everyone has their bias. So you have to watch for that as well. But one of the things that was pointed out to me in the very beginning was, hey, you're including a company called Naspers. It's in South Africa. South Africa is in the fund, so that's why it's in there. But the entire market cap of Naspers is coming from their investment in Tencent. And so are you really investing in Tencent? And which is, a company that in China that has, an app called WeChat, which is used for government surveillance, for mass surveillance tech. So I asked some people whose opinions I respect, some investors, and most people said, no, we don't care. We understand that you're not punishing countries for free trade. You're not punishing them for investment in other countries. And sometimes that's going to happen. You can't eliminate all indirect China exposure. And then we had some human rights activists who are not investors and who are very poor, who told me, look, we would not want to invest in surveillance tech. So I realized through that experience who I was making this for, and I'm making it for those people that deep down believe in freedom and are investing in this for that reason. And I changed course, and we created a rule that systematically eliminates companies like that. So so I think learning from your mistakes, even though sometimes in the ETF world, all of your holdings are public, and nowadays with social media, a lot of your conversations are public with the public. So with the investing public. So it can be hard to navigate and to try to, not try to care about your own kind of how you look in the eyes of everyone instead of, okay, am I really doing the best thing for my investors here? So I think learning to take criticism was a very impactful thing for me, and to learn from that and come out with a better product as a result.
Awesome. I love that. So, and Lauren, same question. What investing experience would you say impacted you the most thus far in your career?
Well, I'm a lot older than Maya and Perth, so I have made so many mistakes, I can't even remember a good many of them. So I've got two examples. One is when I was pretty early in my career. I just graduated from college, and I was working as a junior associate at a financial planning firm. And one of the associates there gave me a hot stock tip. And I called my dad and I borrowed some money from him to buy the stock. And he didn't ask any questions. He said, sure, here's the money. So I bought the stock, and I called him a few months later and said, Dad, I've lost the money. And he said, fantastic. And I said, I know. I said, I lost the money. Like, it's gone. The money's gone. And he said, great. That's exactly what I wanted to happen. And I said, what are you talking about? I borrowed this money from you. And he said, well, I wanted you to learn that there was no such thing in life as a free hot tip. There's no free lunch for anybody. And if you had been successful, that would have been a very dangerous example for you to learn. But now you've learned a lesson. Don't ever do it again. It was worth the $5,000 or whatever he loaned me. He said that was, definitely worth the money. So that made a big impact on me. And then just as an investor, I think really methodically going in and buying stock every single day in the great financial crisis. I remember that crisis so well. I think because I was pregnant, maybe I had like all these hormones, and I don't know what it was doing to my brain. But, I felt like the world was coming to an end and I was going to have a baby. I remember telling my husband, just make sure they don't run out of epidurals. Like, for sure, that's what I want. But every day I would go in and buy stocks, and really, I'd grown up in this value investing camp. I before that, I said all the right things. I'd read all the right books. You know, I'd been managing money for a long time before that. This was like the first really big crisis where I was managing a large amount of money. And it is really hard as a human being to control your emotions. It's really something you need to focus on when it comes to investing. People are not hardwired to be good investors. I speak about this a lot. We are naturally not good investors. It's very hard to go in and buy during a market sell-off for many different reasons, some of them biological. So just the process of going in and buying stocks every single day and then reaping the reward from that years later and the returns for our clients really impacted me. Now, I was well on my way before the great financial crisis with a lot of, you know, there's always a crisis, whether it's in an industry or a stock. So I had navigated quite a few scenarios, but that was the largest one. And it's just a reminder to me that really you distinguish your returns in bear markets. The actions you personally make in a bear market is really what distinguishes your returns, I believe. And it's in managing money through that crisis really impacted me very greatly. So I look forward to these events because they're the way I distinguish myself from my competitors.
It's so hard to have that contrarian mindset. Like, it's one of those things that just, you either have it or it's really got to be learned. You know?
You can learn it. You can
for
learn
sure.
it, but you have to put the money to work and reap the rewards and let your brain, there's a process called plasticity where your brain can kind of reshape itself, so to say. And you have to reap the rewards from putting money to work during those time periods. So, you know, we hire lots of smart people. And it's really interesting. There are some of these people on Wall Street, they're really well read. They can tell you all the great things. They quote Warren Buffett, they quote Sir John Templeton, they can build a discounted cash flow model, 10 ways to Sunday, model this, model that. But boy, when it comes to a really scary event on the market, they want to go to cash. You know, it's amazing. It is a mindset. And if you don't have it naturally, and I think very few people do, honestly, Sir John probably didn't really have it naturally. I think he was so disciplined and worked on cultivating that. And so anybody can do it. It just takes wanting to do it and the discipline to do it.
Absolutely. And I have a feeling that when we do our individual interview for the podcast, I think we could probably do a whole episode just on contrarian investing. So I'll leave that topic right there. And I invite people to, hopefully if you come back on, I hope you enjoy your experience with me. So I do hope that we'll do one at a later date, but I digress. Maya, what investing experience would you say impacted you the most in your career thus far?
One that happened early on was just investing in Mattel and learning very quickly that I had to look more about the qualitative aspects of the company than the quantitative. I had my little checklist of what numbers I was looking for, and if I checked the boxes, I felt that the company was good. And that was the first stock I ever invested in. And I learned very quickly that if there's an iPhone coming out and kids have this new tech that they can play with, that they're probably not going to want to play with Barbie dolls just as much. And I think the thing that's really impacted me the most is attending shareholders meetings. I'm lucky to live on the East Coast, so things are pretty close and next to Boston and New York, and so I've had a lot of opportunities to just kind of drop in shareholder meetings. And from smaller ones, you can really feel like a part owner in the company, and get a sense of how shareholder friendly the people that are actually running it are. And so I think that that's just really impacted me as an investor, to get a feel for the company.
No, I agree with Maya. These shareholder meetings are very important. Lawrence Cunningham has a great book out called Quality Shareholders. It's about attracting quality shareholders and what a business can do to attract them. And the annual shareholders meeting is super important. I run into Maya at Berkshire Hathaway occasionally. I've taken my daughter twice to Berkshire Hathaway. That is a great meeting for a child to learn about investing, because they can go in, you know, the room where they have all well, not all, but a lot of Berkshire Hathaway companies. So, you know, my child can eat a Dairy Queen dilly bar. She can go get some Justin Cowboy boots. She can pose with a little Geico thing. And she really understands the different businesses. I mean, from the eyes of a child, it's a great opportunity. And I've been meaning to write Warren Buffett and say, you need to have something at your annual shareholders meeting more focused towards children. That you have this great opportunity here, because you look around the room during the meeting and there are lots of kids there whose parents have brought them to that meeting to learn. So I think maybe having a breakout room designed just for kids could be very impactful. And then the other thing I would like to see is, I took my daughter to Disney World and she was a shareholder. And I said, well, you know, just call Disney and ask if they have somebody in shareholder services, if they have something like that at Disney World where they can kind of walk you around the park and talk to you about the business. And Disney, you know, they were like, gosh, this woman's crazy. We don't have anything for kids like that. And I'm like, well, why not? That is a huge
That's a great idea.
opportunity to attract quality long-term shareholders. You've got all these kids that own the stock. You know, they should be able to call up their Disney shareholder rep and, you know, get kid-friendly Disney shareholder material. And they should have a booth like that at their parks. I think it's a fabulous idea.
That's a great idea. I have a friend in California who was spending so much money on his Disney passes that he ended up buying Disney for that purpose. He was like, I'm going to make money off this because I'm spending too much here. So
Yeah.
That's a great idea.
Wouldn't it be? So it would be such a great way for kids to learn.
Hey, I'll tell you this, as someone who loves to order off the children's menu at restaurants, I would like that. I'm just saying.
Yeah.
So we're there for our interview, for the podcast panel here. So my last question to everyone is, what advice do you have for women looking to start investing? And then of course, please leave us where everybody can go and find more information about you and to follow you on social media. So we'll go clockwise. So Perth, let's start with you.
Yeah, I think do it with purpose. You know, like we've been reiterating here, the way that you direct your money has consequences, and you know, you have power in that, and with that comes responsibility. So I'm going to Marie Kondo this, do it in a way that gives you joy, invest in what gives you joy. And you know, as far as where to find me, our website is lifeandlibertyindexes.com. Our fund site is freedometfs.com. And I'm on Twitter at Perth_Tolle.
Awesome. Thank you, Perth. And thank you to Perth's Zoom for working through this whole hour. I'm very happy about that. and Lauren, please.
Yeah, my advice is to not overthink it, to just start. So don't get too caught up in everything. Just open up an account at Charles Schwab or Fidelity and buy a stock. That's the first step. And once you have real money at work, even if it's just $100, I mean, that's where the real learning begins. So don't overthink it. Don't try to get everything perfect and organized and plan out your career and buy all the books and do all of that. Just start. Like today, go online, fill out your account form, open an account, put some money in it, and buy a stock. You may lose the money, but you're going to learn a lot, and the money that you lose will be worth it. So I think people way overthink it when it comes to money and investing, and they end up just never doing it because it's so overwhelming, when really it's the first step that's most important, and they just need to go do it.
Agreed. And where can everybody go and follow you on social media?
Oh, yeah. So I'm on Twitter, LC Templeton, and our website is templetonandphillips.com. So we have a great letter called the Maximum Pessimism Report that people enjoy reading. We try to put a lot of really good information in there about stocks that we like or the way we view the market. And, you know, I'm pretty active on Twitter, so that's a good place to follow us too for updates on the business or for market insights. Yeah,
before we get to Maya, we need to get everybody who's on this panel's Twitter account up. They deserve way more followers than they currently have. They should be in like the hundreds of thousands, if not millions already. So can we please, all right, if you're listening, let's go. Let's get them up. All right. So Maya, please close us out here.
I think my tip would be that women shouldn't have to ask for permission, or to think that, like Lauren said, that they would have to be perfect. There's been so many studies about women who won't apply for jobs because they only meet 9 out of the 10 requirements for the job, and men who meet 5 out of 10 still apply. Or other ones where when women take tests, they'll score the same as men, and then the second they have to check their confidence on their the questions that they answer, they'll immediately score lower because they're doubting their ability to answer those questions. And I just think that if you invest in small amounts of money confidently and do your research, that you shouldn't have to ask permission. You shouldn't have to feel like you're going to be perfect. I mean, I think we've all shown that we make mistakes, and the important thing is to learn from them, and there's no way that you're not going to make a mistake. You can find me, Compounding Snowballs is my blog. My Twitter's Finding Moats. And then my 2 books are Early Bird, The Power of Investing Young, and Lighthouse, Women Leading the Way in Finance.
Amazing.
Amazing. All right. Well, thank you all so much for joining me. This has been a ton of fun for me. I look forward to the next time that we can all chat, and stay safe. Good luck. Thank you. This was a lot of fun.
Thank you.
Thank you.